G'day traders, welcome to this video. This is quite an important one. This is going to be my weekly outlook video, but also I think you could see this as an educational video as well, or at least very informative. So this video is really important because in the future weekly outlook videos, we are going to refer back to this quite a couple of times, and there will be updates along the way. So let's get right into it. So I saw a couple of interesting things this morning when I did my weekly analysis. And it definitely seems to me like if we think about power of three, right? We all know as individuals, as traders, how important it is, right? So I don't know about you guys, but for me personally, just the type of trader that I am, I try to identify high probability daily candles and high probability weekly candles. So trading for me in the most simplistic form is trying to determine what is the direction of this daily and weekly candle going to do. But then again, due to the fractality and the nature of the markets, the function of power of three, we do understand that it works across the board, right, for all time frames, regardless of your personal trading level, your personal time frames. This is really important and it works across the board, right? So if we think about the yearly candle, where we are in terms of price and where we are in terms of time, I really want to understand what the market is doing and I really want to set myself up. I want to set myself up for success for the last quarter of 2025, for me personally, but also for the team and also for the community. Therefore, it is really important to do these kinds of analysis once every quarter, right? So we are now strongly approaching the last quarter of the year. It's going to start in around 2 weeks from now. So this is me trying to determine what's going to take place for quarter four. As of now, I do have a really good idea and I'm trying to form a really solid narrative around it all. But as time progresses, we obviously have to update our weekly analysis and weekly outlooks weekly. So traders, if we take a look at this, right, we see the first, second, third, and fourth quarter for the year. We've seen a nice distribution throughout this year, from quarter one right into quarter three, and we have taken significant sell side liquidity just a few days ago, this past week, right? We saw on the weekly time frame a beautiful reaction. Look at this. This is a really strong reaction after taking sell side. This is not only any sell side, this is sell side that it's the low of the year. It was the previous low of the year. So we have now taken out the low of year. We've created a new low of year, but more importantly, we've rejected, right? So due to all the economic uncertainties and everything being so bearish for the dollar, there is obviously potential for the market to dip below this low once more, right? However, as of now, I really like the strong reaction, and this is what price action is showing me, and the information that I have at the moment, this is how I will do my analysis. So if we think about the yearly candle and what it's doing at the moment, this is our weekly candle, or our yearly candle, sorry. This is our current yearly candle. This is what it is looking like at the moment. And this is a bearish candle. So I'm trying to determine if this candle is going to put in its low around sometime now, right? This is usually the time where we would expect the yearly low to form. And I'm trying to identify and build narrative around everything. So if we go to the 12-month chart just for a moment, and let's quickly use a different chart, just so we have more information here. If we take a look at where we are now, we can see the market has ran out these relative equal lows, right? 2 years lows were taken out this year. The market is actually trading into this OB, right? The market traded into this OB, and it is giving us a solid reaction on the weekly time frame, right? So if we just zoom out and take a look at the overall structure of the market, I can clearly see this was really important liquidity that was taken out, right? And I do see long-term highs housing resting liquidity over here, right? If we then take a quick look at a few inefficiencies, just mark up a little bit of makeup here, we can truly see that the market went from sell side of the curve into buy side of the curve at this moment in time on the high time frames, right? So this is only speculation, but at this point in time, it really seems to me like this could potentially be low of the year being created as of now. As I mentioned, this is only speculation. I will build on top of this, but I think it's really important to do this analysis once a year and once every quarter to truly find the success that you truly seek. So nonetheless, with this in mind, the market giving us a slight reaction from this OB so far, I think we could potentially close back in the range, right? If we think about TGIF, quarter 1, 2, and 3 really traded lower, neutralizing liquidity, trading into opposing liquidity pools, right? Or PDA rates rather, the market could very well create some form of TGIF for quarter 4 of this year, all right? So if we then break it down structurally, and I think I'm going to do this for everybody so that everybody understands this. Imagine this is Asian session, this is London session, this is the New York session, and this is London close, right? Just fractalize it for yourself in that way. And I think how many times have we seen before that the market takes out liquidity in New York session, right? And then you have that New York or London close reversal. Sorry about it. So I'm definitely thinking we could potentially get a TGIF for quarter 4 this year, and this is really an important liquidity pool for me. This is something that really stands out to me as a potential draw for quarter 4 of this year. Alright, so that is the higher time frame narrative pretty much explained. So let's go towards the low time frame price action. Actually take a look at price action developing at this moment in time. First off, the weekly candle, right? Well, we can do the monthly even. That was kind of good. All right, so you guys can see this monthly candle opened up, traded lower, right? Well, it was open high low, but now it's going to close, potentially close back in the range here. Okay, so we've neutralized important liquidity down here. The market seems like there's only 10 days left for this monthly close, and it seems like this market is definitely going to close back in the range here. This would lay the foundation for higher prices coming in the future weeks. All right, so I'm definitely thinking we could potentially get something like this in the coming month or two. All right, for the market to reverse or trade back to this high is the low hanging fruit, and this is the overall draw, this monthly inefficiency, right? If we draw a dealing range from high to low, we can see this is resting around equilibrium, right? So that is really important. And if we just move it to the left, we can see this is truly a level that could potentially be revisited in the future. All right, so this is the higher time frame narrative pretty much done on the monthly and yearly chart. Let's go to the weekly. On the weekly, we can see a really beautiful rejection after taking this liquidity right, closing back in the range in this candle, right? So remember, I don't know if you guys remember a week or two ago, I created a weekly outlook where everyone was max bearish on the dollar, right? And I truly expected a reversal. I'm truly expecting dollar to go bullish. And it really, for me personally, it makes sense. Everything, all the fundamentals, everything else is absolutely max bearish, right? And everybody is looking for shorts in Dixie. However, I really like to go against the grain and I really like to go against the public opinion. It has really been successful over the past few years for me. Over the past 2.5 years, I've really seen great success in that, and I don't mind doing it again. And so that is me personally, just looking at price action delivering after taking key liquidity around key news drivers, right? And this really looks to me like this market could potentially trade higher. So as of now, we will go with the information that we do have and build on top of that. So let's go to the daily chart. This is a nice inverse, right? We have taken sell stops, the market has ran higher. We negated this bearish array, right? And the market created new bullish inefficiencies. So for the upcoming week, this could potentially be a breakaway gap, guys. However, I would actually prefer the market giving us one down close candle here, neutralizing previous day low, right? And then a reaction from there should really be beautiful, because it is so important for me to get this down close candle, and I would really prefer this because it creates structure for us to work with in the future, right? This essentially becomes a propulsion block or a launch pad for even higher prices, and that is healthy. I don't like moves like this where it's just a full on, you know, just full on push without any down close candles in it, because these moves are easily corrected over time. Okay, so for that reason, I really do want to see at least a down close candle here for us to truly create it on the daily, and that should build into the weekly candles, and from there we should have really nice price delivery potentially into this was the last buy side liquidity pool that was raided, and ever since it's been low resistant liquidity after this high was created. So this is a daily key level for me. I would really look to see if the market would reach for this on the daily in this next move. And the reason for that is this should also create a new dealing range for us to work with in the upcoming quarter of this year. And that essentially would take us right into the low hanging fruit. So let's go back to the other chart quickly. That would really, is it this one? It's capital.com. No, it's this one. That would really take us into this high and then into the low hanging fruit for the quarter if we think about New York session high, right? We've already talked about Asian, London, New York, right? So this is the New York session high. Just fractalize it for everybody so that everybody can understand this regardless of your experience level. And we really want to see the market draw higher into this. Okay, so for me personally, guys, I like the weekly candle. I like the inverse of this. I created a new BPR, and I really think the market should trade higher. The next thing that I would look for is for the breaker to be created here, right? And think about this, guys. This is still the sell side of the curve, right? This is a last phase of distribution, right? Last phase of accumulation, sorry. And this should be the low risk buy should take place somewhere around here. All right. But also what's really important is if we think about the left side of the curve or the sell side of the curve, we really want to see the levels being created on the right side of the curve too, right? Because that really, these levels on the left side of the curve could really act as really nice launch pads, right? This is essentially what a break block is. You can do it with your inverse fair value gaps. That is essentially what it is. But more importantly, the way they set up across each other is really beautiful. And there's beautiful examples of this on the OJPY monthly chart. Let's just go to the monthly on OJPY. Look at this, guys. This is truly market symmetry, and this is absolutely beautiful, right? Look at the market and the different phases, and look at the accumulation and distribution cycles of these markets, how these sellers is doing business with these buyers, right, on the opposite side of the curve. This was sell side, this is buy side. Look at, once again, this sellers doing business with this buyers, right? Do you see how the institutions mitigate their orders, right, on the buy and sell side of the curve? And that is why it is so important. Look at this becoming the beautiful launch pad for higher prices in the future, right? Similar to this one, we ran out buy side liquidity. Once again, order pairing takes place, and then we get our silver bullet towards these highs, right? So it is amazing to see the market develop like this, and it is truly nice confluence to have, right? If you truly understand all of these things. But nonetheless, just a good example of what I'm looking for. I'm looking to see on the daily chart here on Dixie, and that is also one of the reasons why I would like to see the down close candle forming here, because it really solidifies everything. It really shows me that the previous sellers is now doing business with new buyers, and institutions is mitigating their orders from sell side to buy side, and that's why this down close candles is so healthy, right? Okay, so for this upcoming week, guys, I'm absolutely bullish on Dixie. I'm bearish on EU. This can be seen across the board. We do have SMT here with EU and GU. Let me just mark it up for us. We do have SMT here with EU, GU, and EU took the high and GU failed to take the high, right? This is a failure swing on the high time frame, and we can also see the weakness in GU, right? Compare EU, right? It is selling off, but it is a bit slower, and ideally, as mentioned on Dixie, I really want to see the market create this breaker block, right? If we create a breaker block, the change in state of delivery, then that would really solidify the idea that we could potentially get that quarter four reversal or retracement, potentially, or at least into these lows down here. This should be really good. And we do have that high time frame inefficiencies below, so there's really a potential move towards this. So that is what I'm trying to establish here. Obviously, there will be updates along the way as mentioned. So on the daily time frame, guys, I'm really looking here to see if the market would confirm this breaker block and a change in state of delivery. If we take a look at GU, GU is trading into these bullish arrays, so I would personally expect some form of a reaccumulation, and that would allow EU to be a little bit weaker, right? If we just think about the EG chart, EG ran external, it's been quite aggressive over the last couple of days. I do think if this trades back a little bit, then that would allow for EU to really confirm this breaker, all right, and truly create that smart money reversal that we are looking for. So that is something that I'm looking for. I'm definitely bearish on EU/GU this week, guys. AU and NU is also really interesting. Let me clear the chart quickly for you guys and show it to you. So this was the most recent buy stops that was taken. This was the dealing ranges that was created. I'm not measuring to that specific low, and you'll see why on the lower time frames. And we just do the exact same thing on NZD real quick. Um, we've had this inefficiency, these buy stops, and this dealing range. Okay, let's go to the lower time frames and I'll show you exactly what I like about these two instruments. All right, so I'm not measuring this move. Um, I'm using this expansion leg. I feel like all of this was just manipulation and therefore it's not needed to be counted in. I can, however, measure to this move, but there's no point for me in doing so. So I'll utilize this move. There's a lot of things that's actually going into this, but I will explain this to you guys in future lessons. This is not something that I really want to get into now. It's going to be sidetracked and it's going to take time. Anyway, okay, so if we take a look at this range which are being created, right, this was buy stops resting in premium. We can see the market taking it, order pairing took place, and then we saw a nice reaction, right? And if we take a quick look at NZD, what is something that really stands out to you guys immediately? So let's even go to the weekly time frame, and I'm pretty sure you guys will be able to notice this immediately. SMT, right? This is a major failure swing, right? So this is SMT between ORD and NZD. So ORD is definitely the stronger pair, right? And NZD is the weaker pair. And I really want to see if we could potentially trade low on NZD. ORD should automatically also follow along. So just take a look at the weekly candle closes, right? Neutralize previous weekly high into a key level. This is also a breaker block in premium. I almost forgot to mention this. This is also the breaker block in premium, and NZD failed, never coming up as high into the range to trade into it. You'll see it in a moment. So let's just focus on the SMT. Here we can see once again SMT weakness in NZD, nice down close candle, and a CSD taking place, right? So this is that change in state of delivery. So we definitely have low hanging fruits towards this low down here. There's resting sell side here, and the market could even potentially trade back into this breaker, right? This was a bullish breaker once because we've neutralized sell side, and then we saw that shift in order flow, right? So the market could trade into this, potentially even into this. Look at this breaker, right? NZD never reaching the breaker, so it's never that weak or never as strong as ORD, right? And then once again, as always, guys, order pairing takes place before each and every market reversal. Before a smart money reversal, you see order pairing takes place first, right? That is why it's an accumulation, manipulation, distribution, that power of three. You can fractalize it however you want, but the most important thing is that you have to neutralize liquidity. We can even see it here taking place on Dixie, right? If this market is going to turn around, it's probably going to turn around after taking significant liquidity, guys. And here we can see, right, order pairing takes place below this low weekly rejection candle, and this could very well start to lay the foundation and set the stage for higher prices. All right, so definitely bullish on Dixie, bearish on EUGU. If we take a look at the bonds quickly, we can see buy stops has been taken here. Definitely see the market retracing a little bit into the range, and same here for the 10-year. And then if we take a look at the T-bond or the 30-year, we can see this market could potentially also come back down a little bit deeper in this range. So as of now, the bonds really doesn't disagree with us. Yes, they have been bullish, but we have to pay attention when the market really takes this liquidity pools out and there is SMT involved. It really shows for a nice deep and healthy retracement potentially back into these two down close candles for the bonds, right? So really nothing that really stands in our way. I do feel like the bonds could trade down lower. We've left these relative equal lows on the bottom, so this could very well set the stage for potential bearish price action moving forward, right? We order paired buy side in this range, and the market could very well deliver into sell side. And yes, that's personally what I'm looking for. As you can see, all of this low resistant liquidity, and yeah, this is low resistant too. So as of now, guys, just focusing on EUG shorts, AU and NU could also potentially trade lower. I do prefer NZD USD to be the preferred pair over the odd. And then let's take a quick look at USD CHF. For USD CHF, guys, we've seen a very similar thing taking place, right, to the dollar. Long-term low being taken out, and the market could very well react bullish and trade higher into this range. Let's see if we have that same monthly inefficiencies. Yes, we do. So this is definitely something that could potentially trade higher. I do not like where the monthly candle is trading at this moment. It still looks weak. Yes, we've seen a nice reaction this week. If we think about some of the trades you guys captured on USD CHF, yes, it's been really good, but yes, this market is still lagging behind. Let's take a quick look at USD CAD. USD CAD is showing a little bit strength in terms of just market symmetry, and also USD JPY. Look at this, guys, really important to me. This is an inefficiency, right? This is relative equalize. This neutralized previous month low, and then we are clearly trading up higher, right? Same for USD CAD. This market didn't take previous month low, so it's a little bit stronger. Yes, this is looking a bit uglier in terms of actual price action, but still USD CHF took the low. It was weaker, if that makes sense, right? So I'm just watching and paying attention to the daily and weekly closes and how everything is setting up, and USD CHF has actually given a really nice reaction. So we really just want to see follow through, and this market could potentially still pick up speed to close back inside previous month range, right? Because it is still trading below the previous month's body. All right. So gold is bullish at this moment in time. Nothing really to say about it. I do want to see internal liquidity. I do want to see this market come back to um, to fair value or to discounts at least. As of now, this market is just extremely bullish and failing to do so. Even if we take a quick look at silver, silver once again is just rallying, a new all-time high being created this week, and I really just want to see the market giving some form of reaction or correction, but as of now, nothing really to say about it. The best thing probably in this scenario, guys, is just to look for continuations on silver and gold. However, I am kind of expecting a retracement soon. I was even expecting it this week, but nonetheless, this is just an idea. I want to see the market trade back to discounts for me to get involved in overall long-term, long positions. But as of now, nothing else to say rather than probably just stick to the current order flow and look for um, trying to buy the previous day, previous week, and previous session lows. You should really be well away if you just focus on that for the moment. And then UK oil and US oil, guys, this is actually kind of consolidating still a little bit in the high time frame ranges. I'm unsure about this at this stage. It seemed like the market could potentially really do a really nice bullish move, but as of this moment, we just see the market trading down into this down close candle. So I think for US oil and UK oil, it really comes down to this down close candle. What's the market going to do? Are we going to close below it? Then part of least resistance is definitely bearish. But if the market miraculously closes back above it, then we know this was simply a deep retracement and that buy stops is still on the table. But as of now, I really can't, it's 50-50 at this point, so I'd much rather just be patient and wait for price action to confirm it for us. And that is it for the weekly outlook, guys. Thank you for watching this video. It's been a bit longer than usual, but there was quite a lot more than usual to cover in this video. So good luck with this trading week, guys. I will see you guys in the live streams for this week. Sheldon will also be there, and thank you guys for your participation. Bye bye.